Well, howdy there, Internet people. It's Belle again. So today, we're going to talk about Trump shaking the backbone of the U.S. economy. So through the videos on the One Big Beautiful Bill, I offhandedly mention how the bond market isn't going to like it, because Trump is creating trillions of more debt than usual. I mentioned more than once that passing the Big Beautiful Bill would hurt the bond market. Well, apparently just passing the House was enough. Wall Street traders are stepping away from U.S. debt. It's happening so often, the trend has been given the nickname of Sell America. You don't need to know a lot about the markets to know that a trend that implies dumping everything associated with long-term U.S. investment is bad. I was really hoping we wouldn't have to dive into this, but it seems like time. The reason the bond market is so important is because it holds all the other markets together. When yields on bonds go up, it sends interest rates on a lot of consumer debt up, like mortgages. Yields are the amount the person buying the U.S. debt can expect to make. Basically, the bonds are supposed to be very safe investments because the U.S. will always pay. Nothing is zero risk, but they're supposed to be very, very safe. The higher the yield, the more risk is being seen. If you can get 5% from a 30-year bond that is very low risk, why would you loan money for a 30-year mortgage at 5%? The mortgage is riskier than a bond. So as a result, interest rates on mortgage will go up and the home buyer has to spend more. Now, 5% is high for a yield on a 30-year treasury. We haven't seen that in about 20 years. It was just before the Great Recession in 2007. Until now. 30-year treasuries crossed over 5%. U.S. debt is being seen as risky. Another big issue is that the Treasury just had an auction on Wednesday. Demand wasn't there, and they had to give higher yields. That worried investors. The bond market is screaming that the One Big Beautiful Bill is going to tank the economy. Fixing this issue is hard. The Federal Reserve isn't going to want to let interest rates go up because that slows the economy. But if they buy the bonds to drop yields, they'll produce inflationary pressure. Between the tariffs and the One Big Beautiful Bill, the U.S. economy is on incredibly shaky footing. I have been saying for months this was going to happen with the bond markets, but I didn't expect it to occur simply because the House passed a version we all know the Senate is going to rewrite. The tariffs have taken a bigger toll than I imagined. The tax cuts that primarily benefit the wealthy have an incredibly high chance of tanking the economy. I guess then the wealthy can then use their tax cut savings to buy up the foreclosed homes. The bond market isn't signaling. It's jumping up and down, screaming, and asking Congress not to push Humpty Dumpty off the wall. Anyway, it's just a thought. Y'all have a good day.